We have about 4 minutes before we're going to start. For those of you who are just arriving, this is a moderated forum. We do accept questions from the audience. However, they must be in writing. Please make them professional and courteous questions and try to keep them in a format where both parties can answer. Please write legibly and in question format. Sometimes if I can't read them or if they're just a statement, it's hard for us to try to interpret what you want. So please be legible and clear. And we'll get started in about 3.5 minutes. If you do have any questions initially, we have a couple of folks here that will just move around real quick and get them from you. Okay, we're going to go ahead and get started. I want to take a moment to welcome you to this County Road and Bridge Tax Open Forum. This is a forum that's designed to discuss the pros and cons of the proposed tax before an election happens. We have a representative here from the county and one representative from the opponents of the proposed tax. So I want to introduce Mr. Todd Wood and Mr. Garry Moore. Todd will be speaking on behalf of the county, and Garry will be speaking on behalf of the opponents of the proposal. Here's how it works. We're set for 1 hour, and if you might be able to see, I am absolutely buried with questions. So we'll try to get through as much as we can, cover as many topics as we can. But if I don't get to your question, please do not be offended. There is no way I can get through every question that I have here. I believe the county will be holding some other forums in different places, so you'll have some other opportunities to talk to them as well. So we'll do our best to get through this. We will offer each side a 5-minute opening comment, and then we will start with questions. Each question, both sides will be allowed 3 minutes to respond. And if we happen to go over a little bit over an hour, as long as you're okay with that, and we're holding out pretty good, we'll do that. We'll just see how these guys are doing and feeling about it at that point in time, because I'm sure they'll be talking a lot as well. So with that, my name is Kevin Watt. I work for I'm on the Government Affairs Committee of the Chamber of Commerce, and I'll be moderating tonight. With that said, we'll start with Mr. Todd Woods speaking on behalf of the county.
Thanks, Kevin. Welcome, everyone. Thank you for coming out tonight. My name is Todd Woods. I'm the chairman of the Yankton County Commission. I brought out my presentation that we did here in the first part of July just to talk about our roads and bridges. And Deb, if you want to hit the next slide. The county has 4 sources of revenue for taxes, for road and bridges. We have the vehicle excise tax, wheel tax, property tax, and license plate fees. Next slide, Deb. Yankton County has 260-plus miles of paved roads, 84 bridges that are over 20 feet long. We have many more bridges that are under 20 feet long. Just a quick asphalt overlay history in the past 10 years breaks it down, but that roughly is 26.1 miles of asphalt that have been laid in Yankton County in the last 10 years. Next slide, Deb. Currently, the cost to put down 1 mile of asphalt is about $200,000. So if we did 7 miles, it's roughly $1.5 million. We know in the future we're going to have some large expenses. We're going to have the Fleegs Bridge, which is going to have to be replaced at some point in time. Old numbers on that estimate was $5 to $10 million. Next slide, Deb. Here's some pictures that we had our highway superintendent take of some patching that's been done. Here's one picture. Next slide. Here you actually see 2 patches. The new patch in the background. Shortly in front of the bumper, there's another patch that was done last year. And if you can actually see in the very bottom, there's another crack which may need to be patched next year. We don't know. But you can see the Band-Aids that have been put on the roads in the county. Next slide, please. Here's just another patch showing what our highway department's been doing over the past few months. Next slide, please. Just cracks in the road. Next slide, please. Here's just kind of an inventory of what the Yankton County Highway Department dump trucks, sanders are used. You can see we have several of them, but the bulk of them are from 2005 and older, and they have in excess of 175,000 miles. The top one is a 1987 GMC plow sander that can only be used for snow removal, and that has only 75,000 miles. Along with the asterisk there, that one's scheduled to be for replacement next year. That one will not pass DOT inspection this year. Next slide, please. Here is the projected revenue in 2016. The county's projected revenue is about $11.8 million. General fund revenue about $7.8. Road and bridge revenue about $2.7. At the end of last year, there's about $3.4 million in unassigned cash, which we all heard about at the end of the year. Next slide, please. The 2016 projected highway budget, payroll is about $1.1 million, almost $1.2. Operating expenses, which would be the roads, asphalting, or bridges, that's at $2.4 million. That doesn't take into account any asphalting. Tangible goods is about $260,000. Total budget about $4.3 million. Next slide, please. So you can see revenue comes in at 2.7. We have 4.3. In expenses, we have a shortfall of about $1.5 million. This would have to be covered by taking money from that unassigned cash balance and transferring it in the road and bridge fund. If we wanted to do another 7 miles of overlay, it'd be another $1.4 million. The total transfer would be about $2.9 million from the general fund. Next slide, please. Senate Bill 1 was passed on March 16th of this year. Went into effect April 1st. That's where the power to do this levy came from. We can do 90 cents per thousand, the maximum tax valuation allowed. Next slide, please. That information didn't come out. It got passed on April 1st, but the rules didn't come out to us until much later than that. When we were in Pier in March, they talked about it, but they said the rules are coming, we just don't know. If this is passed, we can start collecting taxes and we can start doing this next year. Next slide, please. Ag land valuations, 90 cents a thousand, roughly comes down to about $1.62 an acre. Next slide, please. On non-ag land, it's on a $100,000 assessed value on a home, it'll cost you about an extra $84.15. Next slide, please. Here's just kind of a way to calculate your own estimate. Next slide, please. Here's another one in regards to organized township. Next slide, please. Result of this pass is about $1.5 million in revenue that we can do on the roads next year. Next slide, please. My only question is, if this is not passed, what will happen to our roads and bridges? What will it cost us in the future? Thank you.
Thank you, Todd. Gary?
Thank you. We don't dispute that roads need to be taken care of in Yankton County and in the state of South Dakota. But I would suggest to you that some of the slides you saw here this evening, take a look at your state highways. There are cracks across all of them as well. Those are expansion cracks. And you're never going to get away from them, not in the climate we have now. If we were down in Arizona, we might get away from it. Does an overlay fix that? Sure, it fixes it until you go through a hot cold cycle, and then you're going to have the same crack all over again. I think what we need to take into consideration here is there's been some talk about the Fleegs Bridge. We put $1 million in a special account for the Fleegs Bridge this past December 29th, I believe it was. That is in anticipation of replacement of that bridge. I would also suggest that there are other means for additional revenue. The state has indicated in the past that they would be willing to trade off 314, that's old Highway 50 coming into Yankton, West 9th as you know it, for some monetary assistance to replace the bridge by Fleegies. There are options out there. The other factor that we need to remember is we just went through a road study, and I believe that study said most of our roads are in fair to good condition. It seems to me that if that is the case, then we would do a critical study of those roads that needed repair first. We'd have a 5-year capital outlay plan. I haven't seen a 5-year capital outlay plan yet. It's a witch. I want you to understand also that this is a 6 to 9% tax increase, depending on how many other political subdivisions you're paying a tax within. So it could run as low as 6, as high as 9%. I think that, we've heard the comment, it's only. Quite frankly, on my house, it's going to take my taxes up to over $3,000. That's going to cost me $250 a month to live in my own house. A business on Broadway is going to increase their tax by $1,400, and that would make his total tax bill on a monthly basis $2,678. Pretty damn hard to make a living when you got a tax bill like that you got to pay before you even put money in the bank for yourself. Understand that your license plate fees have went up 3 times in the last 4 years. We have a wheel tax. We could have increased the wheel tax as well, but we chose not to do that. We have special assessment in the city. The city's talking about raising that special assessment. The water rates have gone up. The water rates are going to go up again. We have a 2% sales tax. We have a business improvement district tax, an entertainment tax, a bed, board, and booze tax, and a tourism tax that we all pay in this city. And we want to talk about affordable housing. Pretty soon we're not going to be able to afford the taxes in this town. Money has been rolled over each year from the general fund into the highway fund, additional dollars. That's a gimme. It happens every year. Make no mistake, this is not an opt-out. This is not an opt-out. There's a difference between this and an opt-out. An opt-out is for X amount of dollars for X number of years. When you reach a maximum of 10 years or your dollar amount, it's gone. There's no guarantee this is going to be gone. This could be used as a supplement for the budget as well. I suggest that we take a close look at our immediate needs and make the hard decisions. Are there roads out there that should be closed because of low use? Absolutely. There are roads that probably should be closed that don't have the traffic count, and I don't dispute that at all. Why take the full levy the very first year? That's just absolutely incredible that we would take that full levy, the full 90 cents. Why not take 50 cents or 48 cents and see where we can go from there? Some of the other counties are going to do it that way. With that, I look forward to questions and further discussion. Thank you.
Thank you, gentlemen. Do you believe that this is a fair tax, given that it's taxing property owners only, especially in light of the fact that many of the properties within the county have been reassessed and many have taken large increases in their assessments over the last 2 to 3 years?
So you want to go first, Kevin?
Gary, you want to do that one first? We'll go back and forth.
Well, actually, I agree with the question. People that use the road ought to pay the tax, and that's the licensed motor vehicles. They ought to be paying the tax. Quite frankly, we talk about increase in assessments. My house, the value on my house went up $50,000 since 2010. I can't afford much more of that, and the taxes have went right up with it. And I'm sure I'm not the only one. As a matter of fact, I checked other houses in my neighborhood. Not all of them 50,000, but the range runs from 10 to 50,000. I don't know how much longer the citizens of this county, this state, can afford that type of appetite and continue to be able to support that appetite.
Thank you, Gary.
In regards to this being a fair tax, I don't know if there's such a thing as a fair tax. You know, a gentleman told me tonight, a fair tax when someone else has to pay it. I don't agree with that. You know, unfortunately, this is the only source of revenue that we have available to us to take on to do it. I've had people ask me, why don't you do a 1% tax on gas in Yankton County and have that go towards the roads? It's a great idea. We don't have that authority. In regards to the assessments, the biggest thing with assessments is we have a shortage of housing. How your homes are assessed is based on homes that have sold like yours in the area. So if there's a shortage of houses, we're seeing people's homes sell for a lot more than they did a few years ago. That's why the assessments have gone up. This isn't something that we just do. It's based on market valuations and done. And you can ask many realtors in Yankton County, and there are houses that are going for a lot more than they did a few years ago. Hence the reason why we need more houses.
Okay, thank you. You get this one first, Todd. There's considerable interest, of course, in a sunset clause, which appears to be missing in this piece. Can you gentlemen speak to whether there is or will be a sunset clause and what that means?
There is not a sunset clause in the levy, but the commissioners have the power every year to reduce the levy if they see fit. I look at the roads. I look at the history of them being taken care of, and they haven't been taken care of for a long time. A lot of it's because there has not been opportunity to take care of those roads. The law wasn't there. If you look at the Federal Highway Trust Fund that is done in Washington, D.C., that supplies the states, that Highway Trust Fund has not been funded on a long-term plan for a long, long time. They're doing these short 3-6 month fixes, which you can't plan for. The state receives those funds, but the state hasn't received those funds, so they've added the new Senate Bill 1, which increased the taxes. They kept the bulk of that revenue. They gave us this opportunity to take care of our own roads and bridges. And it's nothing we want to do, raise taxes, but if we want to take care of our roads, take care of our communities, everybody in this room drove the road to get here. Everybody uses the roads. Now, we talked about fairness. Unfortunately, there's some people that don't own property, but unfortunately, that's what we have in front of us. Everybody uses these roads for some form, whether they come to work, whether they bring their grain to the elevator, whether they're going to town to shop. Everybody uses these roads.
Gary? Kevin, do you want to repeat the question? I think we got a little ways away from that on the answer.
I'm sorry. Do you think this is a fair tax? Especially, that's the one I asked, isn't it? Or was it?
Yeah. Yep.
Oh, sunset clause. Is there a sunset clause?
There is no sunset clause. That's why I want to try to explain the difference between an opt-out and a tax levy increase. Because with an opt-out, there is a sunset. There's an automatic sunset built into it. It has to be in there. Can go no longer than 10 years for X amount of dollars, whatever that's determined to be. So it does, in my opinion, you need to prioritize and know what you need rather than to tax at a levy that you're not sure of.
Okay, thank you. Gary, you'll get this one first. Can you, and I know you spoke to this a little bit earlier in your opening comments, Gary, but can you speak to the fact that we're looking at raising this tax in light of all the other increases in taxes that we've seen, and why are we not looking at increasing the wheel tax, or at least talking about the wheel tax is giving to the county that could be used towards roads? No, I'm sorry I'm throwing a lot at you, but I have so many questions. I'm trying to put them all together as best I can.
Well, I'm going to be the first to admit that the wheel tax isn't going to generate the type of money that we would probably need. Although, with the way Senate Bill 1 is written, it would allow up to $60 on a vehicle, depending on the number of tires it had. You could go up to a $5 assessment per wheel, up to $60 on a vehicle. I think that ought to have been tried first, because quite frankly, if I have 3 vehicles, I'd much rather pay an additional $12 in wheel tax than another $200 in my property tax. That just makes good economic sense. And the fact of the matter is, we have trucks and we have vehicles in our business. I am still better off paying the wheel tax on those trucks and cars and pickups than I am the additional property tax. And the real user is paying for the use of those roads then.
Kevin, we did look at an option of a wheel tax. The revenue that it would generate to maximize the wheel tax, according to our treasurer at Yankton County, would be about $100,000, about $110,000. It wouldn't generate enough to effectively do something for our roads. But that also can be referred to vote. So, looking at options, I believe the wheel tax wouldn't have done enough to do something to the roads. We have a shortfall. Bridges need to be repaired. Roads need to be repaired. We don't have the income to take care of these expenses.
Okay, thank you. Again, I'm going to try to combine this in a little bit, and Todd, we'll start with you. There's a little bit of concern, I think, out there that this tax will be used for anything besides roads. Can you confirm to us that this is purely a tax that will be used for roads? It won't be used for Napa Junction? And I guess the second part of the question is if we don't have additional taxes to pay for roads, how do we pay for them?
So the question is, can this only be used for roads and bridges? Senate Bill 1 only allows this money to be used for roads and bridges only. It cannot be used for salary. It cannot be used for the sheriff's office, state attorney's office, any other place. It can be only used on roads and bridges. In regards to the Napa Junction, Dakota Plains, that's already been talked about in the commission meeting on a TID and a memorandum of understanding. If that project go through, that'll be a loan and in the TID. This levy has no bearing on whether Napa Junction goes forward or does not go forward, because that's already going to be taken care of in a TID, and that's been passed 4 months ago, and also the memorandum of understanding was passed about a month and a half ago. I have a meeting in Pierre with DOT to talk about a low-interest loan that would take care of that road if we decided to go forward. So this levy has no bearing on Napa Junction.
Can you quickly just speak to what happens if this tax doesn't go, and how do we repair our roads and bridges?
We don't have funds to take care of the roads and bridges in the future. We don't have the revenue to come into. I don't know what's going to happen to our roads and bridges. We've looked through the budget. That's one of the reasons why it took to July 15th to pass this, because we wanted to know as we went through the budget line by line, because we all heard about the surplus every year. There is no surplus. The state auditor's office confirmed that. There is no money to take care of the roads and bridges. We just were informed tonight that our highway superintendent in the past several months had to put down $500,000 of patchwork in the county. That's unexpected. I don't know where the money's going to come from moving forward.
Okay, Gary?
All your roads, regardless of whether state, federal highway, or county roads, city roads, they're all going to be a money grabber. The issue is, more importantly, prioritize. I've said it before. You prioritize. What are your immediate needs? Are there things that you can do differently? And certainly there are. Now, I think the real question here was, how do we know this money is going to go to roads and bridges? The fact of the matter is, if you read Senate Bill 1, the County Board of Commissioners may levy an annual tax as a reserve fund to be accumulated and used for the purpose of maintaining, repairing, constructing, or reconstructing roads and bridges. Understand that this can be a reserve fund. There's nothing, absolutely nothing, that says that it will be used on roads and bridges immediately. We don't know that. We got no guarantee. It's not written in the resolution. Could we take $1 million out of the general fund budget or out of the highway budget and disperse it in other areas of the county budget and then supplement the highway fund again with the $1 million that was put into the reserve fund? Absolutely. There's no guarantees. That wasn't part of the resolution. So, I mean, your guess is as good as mine as to where it's going to go, how it's going to be used, when it's going to be used, or whether it's just going to lay there. We don't know. The resolution was, in my opinion, quite incomplete and very few questions answered, outside of the fact that we were going to see a $1.5 to $1.7 million tax increase in the county.
Gary, your question first. Why can't the normal highway repair budget accommodate changes to 4th Street and some of the other areas that we're talking about? And have we been behind the 8 ball in trying to get back on a schedule of repairs and maintenance? What are your thoughts on that? We have a current commissioner and a former commissioner on that aspect of the question.
You know, my personal opinion is There were probably some problems within the highway department here a few years ago, and at this time we have a new superintendent, and that superintendent is doing a yeoman's job of identifying the immediate needs. Are all those decisions he makes acceptable to everybody? There's still some that think that maybe they should have had theirs done first, or somebody else shouldn't have had theirs done at all. But we've made great strides in the last 2.5 years within that highway department. We've purchased quite a bit of new equipment, and that was a goal I had when I became a county commissioner. And just a few of the things that we've been able to do is we've been able to buy semis, trailers for the semis. We were able to buy a new dump truck, a zipper, pickups. We were able to redo a deck bridge on 301st Street. We have replaced a lot of equipment. We bought a water sprayer. Those things we never had before. They were never maintained before, and those are integral parts of having a reasonable operating highway department. Have we got everything that we need at this point? Not yet. We need a new paver too. They're terribly expensive, but we are working with Clay County and trying to cut costs on labor and equipment costs by sharing those pieces of equipment that otherwise would sit idle for 2 or 3 months through the summer. So we've made some real inroads in efficiencies in the highway department and purchasing the equipment that's necessary to get the job done.
Kevin, you repeat the question for me, please?
You're stretching me, man. Why can't the normal highway repair budget accommodate changes? And do you feel like we've been behind the 8 ball in terms of planning for road and bridge repairs?
You know, a lot of the problem has come over the past several years is that the funds haven't all been there. There has been money that has been saved and put aside for years for future uses, but those monies have been pulled back to pay off low-interest loans on the highway shop and other places along those lines. The equipment is definitely needed. I think that's great. We need to keep improving that. But the equipment that we use every day in regards to the dump trucks that plow the roads, that haul the dirt, those are used all the time. And you can see the bulk of them are 175,000 plus. I don't think the past, there's no blame there. It's just the fact that there wasn't money to take care of the roads. It's expensive to take care of roads. They had some difficulties with staff at one point, so they couldn't do some chip sealing. They had difficulty with the weather. We know how weather gets in South Dakota. There has been some lack of attention put to some of those roads, and we need to take care of them.
Okay. You get the next question as well. Can you speak to where the money came from to pay off the highway shop? I think you just basically touched on that a minute ago.
Yeah, the money to pay off the highway shop last September, $400,000 came out of the road and bridge fund, and the balance of it came out of the general fund, I believe. Total on that was about $724,000, $42,000. I can't get the numbers right. That loan was a 2.5% loan over a 5-year period of time. Okay, Gary?
I'll never apologize to anybody for paying a loan off. 2.5% is 2.5%. The only person pissed off was the lender, and not the taxpayer. And quite frankly, I don't care if the lender is upset. My main concern is the taxpayer and saving the taxpayer the interest on that. I'm proud of the fact that that shop building is paid off, that the building that the emergency management put up is paid off. The only debt we have is a safety center at this point in time. And I don't apologize for not having a lot of huge debt. And I'll also say that money was put away specifically for that shop building. Now, if you don't want a new shop, then you don't want the snow plows out pushing snow when it's 20 below and you've had a foot of snow, because they won't be starting. They had that problem forever. We don't have that problem anymore. We got a decent shop. It's paid off, we can get our equipment started, we can get it out on the road, push the snow, and the sooner you get that snow and ice off the road, the more likely you are to save that road.
Did you both answer that? It was regarding paying off the highway shop, and they both got it. Gary, is the proposed tax skewed to the city residents since ag values are less than 50% of market value, while city values are much closer to assessed or market values?
Yeah, I'm trying to figure out where the $1.62 comes from on ag, and it just kind of befuddles me. And as I'm looking through SDSU average land prices, I'm assuming they use 2011 or 2012 pasture and rangeland value in southeastern South Dakota to come up with $1.62. The fact of the matter is, we're all going to pay it. If it goes in, we all pay, whether we're city residents or whether we're a rural resident. But the fact of the matter is, the big payers are going to be the ag sector because they're the ones that have the huge values out there. And, I think that with what you're looking at on market prices right now, what they're going to be pretty scary for some of these guys. And some of the loans these guys have, it's going to be pretty scary for some of these guys. And the last thing they need is another $1,800, $2,000 tax bill. This is going to go on forever. And I want you to understand there's no part of property tax relief in this levy. None. You have the index factor built into this. This is in addition to the general fund budget. So quite frankly, you're going to see the index factor on your general fund. You're going to see an index factor increase on this road levy fund as well. Pure and simple facts. That's the way the legislation is written. You reference the law, it takes you right there, and it tells you the index factor will be figured in it. And there is no 10% property tax reduction for owner-occupied in this additional levy.
Question was fair.
Is the tax skewed to the city resident versus ag since land values are assessed at a lower percentage than the city, which is closer to market valuations as they've made adjustments recently?
In regards to fair, I don't know what really can be constituted as fair. We don't have any say in how the tax is applied. We're bound by state law. And I'm glad Gary brought up the comment in regards to the $1.62 per acre. That number I got straight from the Director of Equalization. And I asked, what is the average increase for the taxes, whether it's on property owners, which is about $84.15 per 100,000, on your ag, about $1.62. The numbers he's talking about is market value. It's not appraised value, it's market value. How your taxes are figured is, it's the assessed value and then the equalization factor. Talking to Lori in our Director of Equalization, 1 acre of the best soil of land in Yankton County, the maximum valuation on that is $3,287 per acre. That's the best of the best. Then you take into this account the equalization factor of 85%. That brings it down to about $2,400. Now, the agriculture tax assessment and valuation and how the tax is figured is very complicated because it takes into price commodity prices. It takes into yield. It takes into many factors. So the $1.62 is an average. Yours may be less, maybe more, but that's where that number comes into play. The numbers that I've given out tonight, those are directly from the Director of Equalization, who factors in the taxes, helps with the taxes. Those are the facts. And if you have questions on your personal impact on this, in that sheet, the handout is out there, shows kind of a breakdown, but talk to the Director of Equalization. Ask them what your taxes would go up if this levy passed. Okay?
I just want to add something to that. in addition to that, they take the soil type and the production over a 7-year period to determine value of land. And I'll be the first to say that it can vary, because 1 year, 3 years ago, we had a drought and we had 20 bushel corn. Last year we had 150, 180 bushel corn, but we didn't have the price. So those are factors that go into determining ag values too, and they do fluctuate. But I would venture to say that your cropland is going to be closer to $2.70 an acre tax, whereas your range and pasture land is going to be closer to $1.62.
I'll let you. I don't want to do too much back and forth like this, but I'll let you.
I just ask where you get those numbers from.
SDSU.
And that's based off of market value. So I'm not going to make this an argument on this, but I would say ask the direct equalization what those facts are. Because Gary is right. It's based on soil. The best land is at $3,287 an acre. You take in the other factors of commodities, yield, and prices, that number is going to go down. And that's where that $1.62 average comes in. And I must stress the word average, because I can't tell everyone right now in here what their taxes are going to go up. It's not possible. But go to the equalization and ask them that question. Lori's probably going to hate me for saying that because she's going to get really busy, but I want you to have the facts. And that's all I care about.
All right, thank you. Let's move to the next one. Todd, this starts with you. Why does the proposed 2016 budget only show $500,000 being spent on roads and not the full 1.5 should this levy pass?
Good question. The question is where the expenses are going right now is roughly that $500,000 is going to roads, to bridges on three projects. I also want to put money aside for that Fleegs Bridge because that's going to cost $5 to $10 million. If this passes, we have a plan in place to start asphalting roads. Brian's already got a stretch of asphalt he wants to put down. Unfortunately, we weren't able to pass it because the money isn't there.
Okay. Gary?
I think in all fairness, you have, you're seeing $500,000 in the budget for roads and bridges. But I think if you go into the provisional budget, you'll also find a line item that has $1.5 million in it. And that line item is the reserve savings account for the highway department. You can shake your head, no, Todd, I got the provisional budget here, and I got it circled where the $1.5 million is in here. If you'd like to see it, I can show it to you.
All I have is here.
Well, I don't know why you'd shake your head because it is in the budget, but it's not in the highway budget. It's a separate line item.
I'll give you a minute.
I think you could go to the last page, and you find your road and bridge fund. Get the $1.5 million road and bridge levy. I rest my case.
That's the revenue coming in for the road and bridge fund.
That's the levy that you want to put on.
Correct.
That's what I said. It's a line item in here, not in the highway fund.
Okay. Can you speak to, Gary, and this will be to you first, and I think you would probably know the answer to this because you've served for many years. Is the $200,000 cost to asphalt 1 mile of road just an overlay, or does it include first grinding down the old asphalt? What is the process that goes into that $200,000 per mile?
I don't know how Brian's going to do it. You can go in and you can grind your surface down, or you can go in and you can smooth your surface out with a 2-inch mat. Done both ways. Probably be less expensive to go in and just put the overlay down rather than to come in with a zipper and grind it down. Although you can use that aggregate again later. So 6 of one, half a dozen of the other. It would be less time consuming just to put the overlay on.
Okay. In regards to accurate, that number I did get from Brian. To be honest, I didn't ask him if it's grinding it down, what it all entails, because I'm not a highway superintendent. I don't know his job, and I don't want to know his job. I asked him the cost. He said about $200,000 a mile. I also asked the highway superintendent in Bon Homme County, and he said about $200,000 a mile. And the highway superintendent in Bon Homme County is my uncle, so I trust his numbers, verified Brian's numbers, so I believe those numbers. I don't know the entire process that it's going to happen, but it's going to cost about $200,000 a mile.
Okay. One of the problems we might have is we're always bidding that road oil about 6 months out, and quite honestly, this is the year we probably shouldn't have done that. We should have waited for the market. But what can we do now?
Who knew? Todd, you're first. Has a map of the county's roads that are affected and that are in the plan for the use of these funds ever been published in the P&D or anywhere else? And if not, why, as we prepare for this election?
There's been a highway study completed and done, which is, some of those pictures are up over there along the wall. In regards to what we've got in place and for plans, Brian has got that plan all laid out. He shared it with us here. It hasn't been published yet, no, because we don't know what's going to happen on September 29th. But we do have a plan in place. We were elected to lead and do what's best for this county, and we've got the plan in place to take care of it. But we haven't published it yet just because we don't know what the 29th of September will bring.
Gary?
I guess if you have a plan in place, you should have brought it forward. Might have helped on the 29th of September. That being said, there needs to be a 5-year plan. I've always said that. You need a 5-year plan. 5-year plans are developed, and they are subject to change. And quite honestly, Senate Bill 1 calls for 5-year plan if you're going to borrow or apply for grant money in here. If you don't have a 5-year plan, you don't need to bother to apply because you aren't going to get any of that grant money. And we have plenty of things that we can put on a 5-year plan. We got plenty of bridges, plenty of roads. Sometimes I believe that government spends money just because they have it, and sometimes those repairs are unnecessary. I'll give you a good example. Mayfield, north of Mayfield on the Walshtown Road. We had to replace that bridge there. That's a federal aid highway. We could have went in there, put in a precast bridge, and had that road up and running in a couple of weeks. But with the federal aid money, we had to go in, we had to change channel of the creek, we had to build box culvert, and our share on that bridge, on that box culvert that they used to replace the bridge, our share, we could have paid for a precast bridge and not used any federal aid and had it done in less than 2 weeks. Our share would have been a little less than what a cost of a precast bridge is. So sometimes when you ask for federal dollars, you're asking to spend more yourself.
Gary, do you have any idea how much this election will cost the county?
I would guess that the cost is going to be $10,000, but you know what? This country was founded on that very right. And anybody that would suggest that we don't have a right for referral or referendums is thumbing their nose at the Constitution of this state and this country. And by God, I don't believe that's what any of us want. We want the opportunity to say what we have on our minds and to choose what we want to pay for. And to suggest otherwise is un-American.
The cost for the election to cost about $20,000.
Okay. Todd, does the county have vehicles on a replacement plan in the capital expense plan? Again, it's referring to the trucks and some of the different types of equipment that you both talked about that the county has purchased recently?
Yes, we do. We have a plan in place. We have a plan to replace one of the trucks next year. The big dump truck's going to cost around $200,000. We are in the process. We were approved to get a new pickup this year. But to be honest with you, that may not happen with some of the recent expenses we've had come up. So we have that plan in place. Many of those standards and multi-use trucks, I call them, that use snowplow and everything else that used all year round, they have a lot of miles on them. What those slides didn't show is the cost of the 3 maintainers we have that are going to need to be replaced in time. Those are going to cost around $300,000 a piece. But there is a plan.
Okay. I've pushed to have a rotation equipment for the years I was on the county commission. It only makes good sense. Fact of the matter that none of the tandem axle trucks had been replaced in 15 years was just unacceptable to me. There is a rotation plan for maintainers now, and I believe that sometime in the next year or two we're going to be rotating some maintainers out as well, and that has to be done too, and they're a big ticket item as well. So you have to be rotating that equipment out, particularly the use that some of it gets, the maintainers and the trucks. They're not just used, they're abused, particularly, and I don't mean that derogatorily. They get abused when they're pushing snow. You don't know how hard that is on equipment pushing snow in the wintertime. It just beats it all to hell. So the fact of the matter is it is a good idea, and it becomes a lot more cost effective when you're not putting several $1,000s worth of repairs into a vehicle every month or 2 months.
Okay, we'll ask one more question and see how that goes before we go to closing. And I might just be able to give you 5 minutes to close if you feel like you want that. If this tax increase does not go through and we're unable to fix the roads on a reasonable schedule, when and how are we going to be able to accomplish that?
Who's first?
Gary.
We're not Chicken Little, the sky isn't going to fall, folks. We'll figure it out. That's what we have this sitting on top of our shoulders for. And if we can't figure it out, there's something wrong. But we will be able to figure it out if it doesn't come along. We've got by in the past. Are we going to build 4-lane highways? No. Are we going to build 8-inch thick concrete highways? No. Are we going to have to prioritize? Yes. Prioritize, prioritize, prioritize. That's something that, in my humble opinion, has not been done for a long time, is to prioritize what your wants and what your needs are. And there's a big difference between wants and needs. And that can be done. That can be done in planning session. It can be done by looking at your studies and determining what is important and what is not important. That can be done by doing traffic counts on certain bridges and certain roads to determine usage and whether they justify having a lot of money put back into them. It only makes sense to do it whether you have the money or not. And it's not being done. So maybe it would push that button a little sooner and make the issue a prioritization rather than wants and needs.
Can you repeat the question, please?
Basically, the question is, if this tax increase does not go through and we're unable to fix the roads in the time that we would like to fix them, when do we fix them and how?
You know, Gary is right. Prioritize. We have prioritized. Brian's got that plan laid out. We got a plan to put down the roads that have the traffic. Where's this money going to come from? I don't know. And Gary's right. using their heads. We're trying to think outside the box. We've talked about, and Gary brought up as well, partnering with other counties. But it all takes money to put down this asphalt, plain and simple. If we partner with Clay County, Bonneville County, other counties around us with materials or machines, you still have to be able to put asphalt on the ground. It'll save money. But we need funds to come in to take care of this need. It could be a increase in the wheel tax, but again, that's $100,000, about a half a mile of road. We have 260 miles of roads and bridges, or 260 miles of roads, over 80 some odd bridges that are 20 feet long. Those bridges are inspected by the state, correct, Brian? The state will give us a report on which ones needed more than the others. So the priorities are there. What's not there is the money to take care of them.
Okay. Gentlemen, we've got about 9 minutes left. I'm going to move you to closing. I'm going to give you up to 5 minutes to make a closing statement. I do want to take a moment just to thank you for a respectful discussion. Good questions by the audience, and I know I didn't ask them in completely the way you may have asked them, but I tried to get through as much of this material as we get through, and we moved through it pretty well. So I'm going to start with you, Gary, since Todd had the first word in opening statements. I'm going to give you the first word in closing statements. Up to 5 minutes.
Well, I would close in saying we have taken care of roads, maybe not to the standard that some people would expect us to, but we've been able to take care of the roads in the past. We'll be able to take care of them in the future, whether this levy passes or not. That's pure and simple. That's a fact, ladies and gentlemen. You haven't seen an asphalt road tore up yet. And interestingly enough, those are hard decisions to make. But they've made those decisions in counties like Charles Mix, Lake, Moody, Brown County. They have taken a look and prioritized on some of their asphalt roads and said, we don't have the traffic count, and we cannot afford these anymore. And they've taken them out. Has there been a little belly aching? Yeah, for a little while. But guess what? It's worked. I'm going to go back to Senate Bill 1 again, and there are a couple of counties that are looking at a levy, and Clark County is one of them. Dewey County is looking for 48 cents, and that's why I'm saying, why do we take the top of the levy right away, 90 cents? But Dewey County, interestingly enough, probably should have went to the top of their levy because all of Dewey County lies within the Standing Rock and the Cheyenne River Indian reservations. So I don't know that there's a lot of taxable ground there that they can generate those dollars off of. Grant County passed a 50-cent per thousand levy, and that's being referred to a vote as well. I know there's been some talk about Lawrence County and setting a levy. They have not set a levy for property tax. They've discussed the wheel tax. They've taken no action on that. Lyman County is going $1.20, and Marshall County is taking $1 when they could take $1.20. So they're not at the top of their levy either. Marshall County is in the far northeast. Lyman County is in south central, south of Pierre, just 281 and 90. Grant County, central South Dakota. Dewey County is up in the northwest of Pierre, and Clark County is in central South Dakota. But there's a lot of provisions set forth in Senate Bill 1. The fact is that the state has set up an account that they're going to put $1,750,000 into quarterly. Those counties that have a wheel tax in place and have a 5-year capital plan that can be prioritized or updated annually, are eligible for grants from that fund. There's also $6 million of federal dollars going into that, as well as $2 million from the State Highway Commission. So there's other issues here too. But I haven't even talked about the gas tax tonight that we're all paying, and haven't talked about the excise tax increase either that we'll all pay when we buy another used or new vehicle. Those are all things that cost us money. And to suggest that we should give up purchasing something at the local level, to me, doesn't say much for economic development in this community. Give the money to the county and don't worry about the business people. I mean, that doesn't spur good economic development. It just doesn't. Good economic development would generate the dollars we need to repair these roads. And in closing, I'll just say Chicken Little one more time. The sky's not going to fall. Hasn't fell in the past. It's not going to fall tomorrow.
Well, I want to thank everyone for coming out tonight. I appreciate you taking time out of your busy summer schedule. It's still summer out, even though it's September 1st. When I ran for this position here last year, every debate that we talked about, roads was a number one concern. Everybody talked about how we need to take care of the roads. The bridges are in poor condition. Last year, a road limit was lowered on those roads because of the dire need for these roads. So we all know how bad these roads are and they need to be taken care of. Is this plan perfect? Absolutely not. I don't know if there's such a thing as a perfect plan. Do I want my taxes to go up? No. But I do know that I want my taxes to go up if I can take care of these roads, take care of these bridges that bring the grain from the field to the elevator, brings people to town to shop in the stores, to buy groceries, to buy goods, that brings kids to school. It brings people to work. It helps the workforce. It's a tough decision, and one that we didn't come to lightly. Yankton County is one of these counties that has priority, as Gary talked about, in regards to funding from the state level, because there is a 5-year plan. I think we're one of 5 or 6 counties that have priority because we have a wheel tax, because there's a plan in place. But we have to find a way to take care of these roads, because if we don't, I don't know what will happen. And yeah, the sky may not be falling, but the magic, the answer here is we all know what the problem is. The roads are in bad condition. We all know what the answer is. It's going to take money, but where's that money going to come from? I'm open to solutions to find a better solution, but right now this is the only one that we've seen to come in front of us that can do something. Why 90 cents? It comes out to about $1.5 million in additional revenue to put in the roads. Half of that would be about $700,000. That makes about 3.5 miles of asphalt. We have 260 miles of roads out there, and only 26 have been asphalted in the last 10 years. Again, this is not a perfect plan, and I'm open to solutions if someone else has them. Thank you again for coming out tonight. We appreciate your time.
Let's give both of our presenters a hand. Gentlemen, once again, I want to thank you for coming out and having a respectful discussion. Folks, again, thank you for coming out. This is a great turnout tonight. We so appreciate the fact that you care enough to come here. Whether or not you like the fact that this was referred to a vote, it was legally referred to a vote. You have an opportunity to cast your vote whichever way you see fit. So please make sure you do not miss the opportunity to have your voice heard on Election Day. On behalf of the Yankton Area Chamber of Commerce, I want to thank you for attendance and wish you a good night. Thanks.